Are you intrigued by the stories of people getting rich with Bitcoin, but also nervous about the wild swings and confusing terms? What if you could understand the basics of this new digital frontier and see if it's a legitimate path to potentially growing your wealth rather than just a risky gamble? Today we are demystifying crypto investing. By the end of this video, you'll have a clear, straightforward understanding of what cryptocurrency is, the different ways you can invest, how you might make money, and the crucial pros and cons, especially important given the evolving regulations worldwide. This could be your first step, understanding a rapidly changing financial landscape. In this video, we'll cover what crypto investing is, how you can invest in crypto, how you get paid investing in crypto, pros and cons of investing in crypto, and at the end of this video, I'll be sharing if this is a good investing option for beginners. So let's get started. When most people hear crypto, they immediately think of Bitcoin. But just like money isn't just notes and coins, crypto is a vast and evolving digital ecosystem. The news is filled with stories of incredible gains and devastating losses, making crypto seem like a high-stakes casino. Many people feel completely out of their depth, unsure if it's a legitimate asset or just a passing fad. What exactly are these digital currencies and why are so many people paying attention to them? Crypto investing at its core is about buying and holding digital assets like Bitcoin or Ethereum with the expectation that their value will increase over time. Unlike traditional currencies controlled by governments, cryptocurrencies operate on a technology called blockchain, a decentralized and transparent digital ledger. This means no single entity has control, and transactions are recorded and verified by a network of computers. You're investing in this new technology and the various projects built upon it, hoping they gain wider adoption and value. You don't need to be a tech wizard to get started with crypto. There are several ways to participate, from direct ownership to more diversified approaches. The idea of buying digital coins can feel abstract. Where do you even get them? Is it like buying stocks through a brokerage or something entirely different? The perceived complexity often stops people before they even begin, but thankfully getting started is more accessible than you might think. Here are the most common ways to invest in crypto. The first is direct purchase via crypto exchanges. This is the most common method. You can use a in your country licensed cryptocurrency exchange like Coinbase, Binance or Kraken, ensuring that they are regulated for consumer protection in your country to buy cryptocurrencies directly using traditional money. You'll set up an account, go through identity verification, so KYC or Know Your Customer process, and then you can buy specific cryptocurrencies. Crypto is stored on crypto wallets. Once you buy crypto, you need a place to store it. This can be on the exchange itself, known as a hot wallet, or you can transfer it to your own personal cold wallet, a physical device like a USB stick for greater security, especially for larger amounts. But ensure you don't damage the stick or forget the password, otherwise you lose your money. The third is through crypto-related stocks or ETFs. For those who want exposure to crypto without directly owning the digital asset, you can invest in companies that are heavily involved in the crypto space, like cryptocurrency mining companies, blockchain technology firms, or even companies that hold a significant amount of Bitcoin on their balance sheet. Similarly, some exchange-traded funds, in short ETFs, now invest in Bitcoin or other cryptocurrencies, offering a regulated way to get exposure through a traditional brokerage account. The fourth is staking and lending. Some cryptocurrencies allow you to stake your holdings to support the network's operations and earn rewards, or lend your crypto to others for interest. However, many countries have introduced strict regulations restricting lending and staking of retail customer tokens, aiming to protect everyday investors from these higher risk activities. So you've bought some crypto. How does that digital asset translate into actual financial returns? It's not like getting a regular dividends payment from a stock or rent from a property. The ways crypto investments pay off can seem less obvious. Are you just hoping for the price to go up? Or are there other ways to earn from your digital holdings? There are a few primary ways you can potentially make money from crypto investing. The first is capital appreciation, so when the price goes up. This is the most straightforward. You buy a cryptocurrency at one price and sell it later at a higher price. The demand for a specific crypto, its technological advancements, adoption rates, and overall market sentiment all influence its price. This is where those stories of huge gains come from, but also where significant losses can occur if the price drops. The second is staking rewards. For certain cryptocurrencies that use a proof-of-stake system like Ethereum, you can stake your coins, essentially locking them up to help validate transactions on the network. In return, you earn new coins as a reward. However, as mentioned, many regulators currently prohibit digital payment token service providers from offering staking or lending services to retail customers due to the higher risks involved. The third is yield farming, which is a form of lending. This involves lending out your cryptocurrencies to earn interest, often through decentralized finance platforms called DeFi. Again, for retail investors, current regulations heavily restrict or prohibit these activities from licensed entities to protect consumers. The fourth are so-called airdrops. Sometimes new crypto projects distribute free tokens to existing holders of certain cryptocurrencies as a marketing strategy. While not a guaranteed income stream, it can be a pleasant bonus. The primary way most retail investors will look to profit from crypto is through capital appreciation by buying and selling on regulated exchanges. Crypto investing is a high-octane world with significant upsides but also considerable downsides. Understanding both is critical before diving in. You hear about people becoming millionaires overnight, fueling dreams of quick riches. But then you also hear about massive crashes, scams, and regulatory crackdowns. How do you separate the hype from the reality? And what are the true risks you need to be aware of? Let's look at the key pros and cons of investing in crypto. The pros: there is high growth potential. Cryptocurrencies, particularly newer or smaller ones, can experience rapid price appreciation, offering significant returns in a short period. Decentralization is tempting. Many cryptocurrencies are not controlled by governments or central banks, which appeals to those seeking financial independence and privacy. There's also innovation. Blockchain technology, which underpins crypto, is highly innovative and has the potential to revolutionize various industries beyond just finance. Investing in crypto is investing in this future tech. Accessibility is also a major feature. Crypto markets operate 24/7 and you can buy and sell relatively small amounts, making them accessible to a wide range of investors. And there can be diversification with caution. While highly correlated with tech stocks at times, crypto can offer a degree of diversification within a traditional portfolio due to its unique market dynamics. On the con side, there can be extreme volatility. Crypto prices can swing widely in a very short time, leading to significant and rapid losses. This is arguably the biggest risk. There is a high level of regulatory uncertainty. The regulatory landscape for crypto is still evolving, and strict measures to protect retail investors can be missing. Changes in regulations can significantly impact prices and accessibility. There are also security risks. Crypto assets are vulnerable to hacking, scams, and fraud if not stored securely. Losing your private keys means losing your assets forever. There's also a lack of intrinsic value. Unlike a company's stock, which represents ownership in a business, or a bond, a debt with guaranteed payments, many cryptocurrencies don't have underlying physical assets or guaranteed income streams, making their value purely speculative. There's also a high level of complexity. Understanding the underlying technology, different coin functionalities, and market dynamics can be challenging for beginners. And there are environmental concerns. The energy consumption of some cryptocurrencies, like Bitcoin's proof of work mining, is a growing environmental concern. So, is crypto investing right for you? Well, it's a fascinating, rapidly evolving space with the potential for substantial returns driven by innovative technology and a decentralized vision. However, it comes with inherent risks of extreme volatility, regulatory uncertainty, and security challenges. If you're considering crypto, start small. Do your thorough research on the specific cryptocurrencies and projects you're interested in, and prioritize learning before investing. Understand the technology, the market, and the risks. There is a high probability that you can lose all money you invested in crypto, so my recommendation is to not have more than 10% of your money invested in crypto. I personally have less than 1% invested due to the high uncertainty. So, is crypto a good investing option for beginners? In my eyes, it's not. It's one of the world's most risky investments and requires a high level of technical and financial expertise. If you, out of any calling, must invest in crypto, my recommendation is to go with a crypto ETF, as you can avoid the challenges such as the dangers of storing crypto or being scammed or hacked. Also, only invest an amount that you are comfortable to completely lose. If this video helped you clarify the world of crypto, please give it a thumbs up, subscribe for more insights into wealth building, and share your thoughts or questions in the comments below. Thanks for watching, and check out the next video to learn more.